So it would probably be helpful for some people in here to define cap rate.
Okay, so cap rate is basically your net operating income divided by your purchase
What's
price.
net operating?
Your net income after all expenses divided by your initial investment. So if you're,
Oh, I see, I understand.
if you're increasing your cash flow by $10,000 a month, and that's $120,000 a year, and comparable properties are selling it, you know, if you bought it all cash, it would make 8% on your money. That would be an 8 cap without any financing. And so if you increase the cash flow by 10 grand a month, that's 120 grand a year, divided by an 8 cap or an 8% interest rate. You basically take your 120,000 divided by 8%. That is your increase in value on that property if everything else in the area is comparable at an 8 cap.
Was your cap rate the same as ROI?
No, it is not. ROI considers financing in place, so cap rate is specific to, specifically just your net cash flow before financing divided by your total cost on the project, if that makes sense. There might be some slight, adjustments.
Elizabeth has a question on cap rate.
I was just gonna, it's not really a question, it's more of a comment. It's like your return on day one. It's like your snapshot return.
It's
So
actually
when
a
you buy it, it's
relationship.
like, if you're,
Cap rate, the relationship between the cost of the project
And
and the
the
cash flow.
yeah, the value of the
That's what it is, and you can calculate all of those based on that ratio.
So just to add to that real quick, there's an inverse relationship. So the lower the cap rate, the more the person is willing to pay for the property, and the higher the cap rate, the lower.
So,
Question?
yeah, what do you, okay, when you're buying these self-storage facilities, what kind of cap rate are you looking to come in at, generally, what are they?
It's a good question, and to be honest, it's complicated because of those value-added components. So on average, self-storage facilities are in the 7.5% area, depending on which market you're looking at. But I'm willing to look at cap rates far lower than the cap rate Jeremy's willing to look at because of the value-added component there. So the year one cash flow may not be that significant until they implement these value-add strategies. Until the tenants are used to using the U-Haul component. Until that U-Haul component has increased that physical occupancy. And there's other value